Thank you, sir, so much for joining this event. Today we have with us Managing Director of Dynamic Cables, Ashish ji. Thank you so much, sir, for joining this conference. If you can just help us first to start with your growth journey, how you have grown over last 4 or 5 years, and how this company has evolved. If you can just start with that, and then and also if you can tell us what's key steps for next 2 to 3 years in terms of growth, and which all sectors are key for you, which you're looking up. That's one first. Thanks.
Deepak, thank you. Uh, Deepak, this is a 1986 born company. So we are 37 years old now. So we are primarily into manufacturing and export of power cables and conductors. And we have 3 units in Jaipur, two in industrial area in Jaipur and one in Ringas industrial area. And we have like around 2 lakh square feet of facility which manufactures power cables. So our majority of production is of power cables and little bit of conductors also. So these power cables are basically used for the distribution in the country, as well as we export a lot of power cables. And uh, in terms of market, we supply to the electricity boards, a lot of utilities and a lot of EPC contractors. Our main key customers in the country are some of the biggest EPC contractors in the country. To name few, they are L&T, they are Bajaj Electricals, they are Godrej Power, they are Tata Power, Adani Electricity. These are the customers we are serving right now.
So if you can also help us now growing ahead down the line 2 to 3 years, any key segments or any key sectors that you feel that those sectors will grow faster for you, and also want to understand with entire private capex picking up and also railway capex picking up, how you're looking at these two sectors picking up for us.
So a lot of infrastructure spending is already happening in railways, we can see. In DMRC also, a lot of infrastructure, a lot of new metros are coming. So we are already supplying in railways in RDSO, in DMRC, in Chennai Metro also we are supplying. So we are already present in these sectors. So the next sector we see next 3 to 4 years is the renewables. So we are focusing to supply on the solar. All the solar parks are already equipped with our cables, and the news, all the, I mean, EPC contractors or the solar parks like Adani's are there, Tata Power are there, we are already supplying them. So in next 3 to 4 years, we see a very good growth in the renewable source. So we look forward for a very good growth in this solar and renewables. Yeah.
And also, currently we are doing somewhere around 600 to 700 crores kind of revenue. So, what's our current capacity utilization levels, and how we see utilization levels shaping up over next 2 to 3 years? And also, from the current setup, what kind of peak revenue we can achieve over now the next 2 to 3 years?
Yeah. So Deepak, we are right now at 650 CR. We closed in FY23, and in last 7 years we have shown a CAGR in terms of top line of 15 to 20%, which we again, like, we would like to say we will maintain this. And for as of now, we are adding some new products also in our basket. So around 5 to 10% of the growth will come from the existing product range, and another 5% to 10% growth will come from the new product line. So all over we see, and in next 3 years, 15% CAGR we are seeing. Yeah.
And if you can just spend 1 minute on what are the new products that you are entering in? Any specific products that you are entering in apart from the renewables?
Okay, so these are high capacity conductors. So already, and high capacity as well as covered conductors. So they were already in the market, but the technology is not with many people. So we have also bring in this technology, and we are already manufacturing and supplying to all the electricity boards right now.
So now with this mix changing, how, and also a lot of cost optimization that we are doing at our end, how one should look at margin profile shaping up, although we have done a very strong margin of high single digit to close to double digit. So how one should look at profitability shaping up over next 2 to 3 years?
So I really cannot say much about it, but I think present profitability is around 11%. We see marginal increase on year-to-year basis, but because our raw material content in our overall sale is very high, so I don't see much increase in the profitability, but a reasonable increase will always be there, because our concentration is always on the cost uh, efficiencies. So we see a little bit of increase in that. Yeah.
Got it. Got it. Fair enough, sir. Thank you so much, and all the best for the upcoming years.
Thank you, Deepak. Thank you. Thank you.